I think I'm coming in live. I'm gonna Ask Sam today. Been a bit slack with my Ask Sams this week. Had a lot on, a lot of deal making this week. Developments, buy and hold real estate, dumbbell investing. Um, yeah, a lot going on. A lot going on. A lot of good things. A lot of good things, which think's awesome, isn't it? Doing a lot of coaching at the moment, a lot of conversations around sort of personal leadership and yeah, just, obviously designing our lives through this thing called property investment. Welcome to the show today, getting in sneaky lesson on real estate this afternoon. Certainly later today, make sure you tune in for Andy and Jason, no doubt doing their show, Wine and Wisdom. If you haven't caught the latest episode of the Urban Property Investor, jump onto that. Did come out on Wednesday. A little bit to do with the idea of, what the future of real estate actually looks like here in Australia. And certainly I've got some absolute beliefs. Ben's thrown out there, beer Friday. Absolutely. I can't wait, to be honest with you. So I will actually, I think, talk about a little bit about my podcast that I threw out this week and some of the context around that, and might just flip over to hopefully you can see me. There I am. All right, so might use the old iPad to draw. So Australian real estate, if you like, for a very long time in urban areas has had relative strength because of wages. And it's fair to say, if we look at the sort of timeline of transformation of real estate here in Australia, wages really flew up in value from around sort of 2003 to 2013. We had two mining booms. And what mining booms actually did to Australia was inflate what people were truly worth. And it left a great legacy, though, of a high income society. Australia today is a very, very high income society. The fact that, people on average, I think the average wage at the moment's around $90,000. That's not the average income. That's the average wage or salary in Australia. When you take into consideration pensioners, the numbers drop a bit further. But what happened was people who had nothing to do with mining, all of a sudden, because of the labor shortage back then, were getting paid more. And so the labor shortage inside the mining sector was dragging people out of other industries. And then, all of a sudden people were leaving real estate or hospitality or offices to be part of the mining boom, which was unfolding. And ultimately that left Australia with a wage increase. Into the future, though, if you were to divide the workforce up, skill is definitely going to be something which is undersupplied into the future. And the big problem inside of Australia, should immigration, once again start flowing, is we're in this kind of place where there is no real room for wage growth for a lot of people in Australia. And the reason being is we really had a boom of wages back in this era. Since then, the cost of money's gone down. Wages have money going down, wages going sideways. and real estate, for the most part, going up. And that's kind of where we find ourselves today in this strange place. Money is worthless in the bank. Wages aren't going up, but real estate is inflating. And so when I look around the world, there's kind of three good examples of what that looks like for the future of real estate. And the first example is Japan. Japan is an economy where back in 1986, basically it overinflated, and it's been living off basically 1% interest rate for 30 some years. Hence why a lot of people sort of reference Japan being the third largest economy in the world as a bit of a zombie economy. The only way to keep Japan rolling is stimulus, more money being pumped into the system. And so what that does for Japan is it kind of creates two worlds. On one side, you've got people with assets doing really, really well. And then you've kind of got this sort of zombie marketplace where, it's almost like deflationary led. And it's quite interesting going there. You can go to Japan and, go to the countryside of Japan, and there's maybe 500,000 vacant homes in Japan. And then you go into the more prestigious parts of Tokyo, Yokohama, and real estate is, huge. It's like so expensive. So we can learn a lot from the fact that we're probably going to go into a very interesting 1% place where interest rates aren't going to rise, which is great. But half of our economy will certainly end up very zombie-esque, where a lot of people aren't going to make a lot of money. And there's really, what's so fascinating about coronavirus is everyone's sort of moving properties, and some people are going, almost like to more expensive parts of the cities. Some people are moving to cheaper parts. We're seeing this kind of migration, if you like, of the middle class, either going up, following the assets, or almost going sideways or down following the money. In America, in the USA, real estate's quite an interesting beast, if you like. You've got basically two-tiered market. You've got housing, which is the $1 million marketplace. And that marketplace is all about growth. And you've then got this kind of second tier marketplace where properties are, $50,000, $100,000. They get a good rent, maybe $200 per week. But they're not designed for growth. There is no growth on them. And a lot of property investment in America, if you like, is designed about buying like hundreds of these properties at a time and living on sort of the income that they produce. In real estate, we call that positive cash flow. And, the reason I sort of flagging this is here in Australia, we're now almost designed to end up with money like Japan and real estate like the USA. What that will ultimately lead to is both positive cash flow real estate and capital growth real estate. But investors need to be very cognizant of the difference, because a lot of investors are right now, unbeknownst to them, buying positive cash flow real estate, which they think they're buying for capital growth purposes. And the big challenge for those people is, because they're not going to be buying 10 at once or 100 at once, the cash flow is kind of irrelevant. It's kind of like after your income, after all is said and done, paying expenses, might make you $2,000 a year. It's not exactly going to change your life, but potentially won't get capital growth. So then we've got a marketplace which is all about capital growth, but capital growth is on its way to becoming niche around where the incomes are, because obviously people on higher incomes can spend more on real estate. So it's quite fascinating to see us go into this place where the money part is going to be Japanese. The real estate part is going to become USA-esque. And what that has traditionally been in the past is, traditionally in Australian real estate, you went regional for positive cash flow, and you went city or urban for capital growth. And now you're really almost seeing a divide in both marketplaces. And the divide is no longer city or regional. It is more the divide of inequality and aspiration. And obviously, what I try and do is I look at a supply gap, which is known as the affordable yet livable supply gap. So suburbs, which are basically in this middle bit, and there's properties in those suburbs in this middle bit, and really they can go two ways. They can end up in the inequality zone of society, or they can end up in the aspiration pocket of society. And so because of what is going to unfold, which is this, that you're either going to end up with positive cash flow properties or capital growth properties, from basically the concept of the middle class being split in two, means assets are going to be split in two. So obviously, buying the growth first, I actually think that what that'll end up meaning is these positive cash flow properties not going to get huge amounts of growth, and rich people, basically people who've built millions from real estate, done the Forex growth plan, done 5, 6, 7 properties, built an asset base, are going to be able to do what happens in America. You might, does anyone know, like watch, for example, Grant Cardone, the American guru dude. I don't know if anyone watches him, but what Grant Cardone basically does is he forms a syndicate, and he basically goes out and buys 1,000, $100,000 properties at once for everyone who's in the syndicate, and they share the cash flow. So it's kind of interesting seeing Australia morph into two marketplaces which already exist in the world. Certainly positive cash flow has existed in Australia before. Certainly has existed in mining towns and regional marketplaces. But what's quite interesting now, you can go to an urban landmass. You can go to Brisbane and Canberra, and, sort of 30% of, for example, Brisbane's property market is never going to grow, never going to happen. It's not going to happen. It'll throw out cash flow, but you're going to need, 20 of these cash flow deals to make income. And so obviously you can go to 70% of Brisbane now and you can get growth. And so, for the most part, people want that growth so they can buy the cash flow later. The challenge for a property investor, of course, is to really understand what they're doing, because where this goes wrong for people is they buy this thinking they're going to get this. And that is where real estate often breaks down for people. Asset allocation, they don't understand the asset, the difference with what is going on in the urban landscape. So an interesting dynamic. If you want to hear more about it, just jump on to the Urban Property Investor podcast. I'll give you a full explanation. That one came out this week. Hey, thanks for tuning in. Alison, I think your podcast is coming out with Tab, isn't it? Apparently you're from Hunters Hill. You're from my hood. Who knew? Can't believe it. Maybe dated as kids or something. I don't know. I'm quite interested in your world of understanding you're from Hunters Hill. So that blew my mind when I heard that. Is that right? Want to throw in the chat for me? No? Yes? All right. Maybe you've gone. All right. Well, thanks very much for everyone's time. Tune in to hear more this evening from Jason. Oh, yes, you're from Hunters Hill. Just wish my parents kept the place. I know. How stunning is that neighborhood? What a great place to grow up. Wow, I'm gonna stalk you, and I'm gonna find out if we have friends that we all know each other and stuff. Wow, that's so amazing. That blew my mind when Marcus told me that. He was listening to the podcast to do the images, and he's like, Sam, you'll never guess Alison Newman is from Hunters Hill. And I'm like, what? That's crazy. You're still there. Oh my God, you're in the peninsula. Well, we got to catch up. I think we're going to take this one offline. Everyone thinks we're wackos. Hey, have a good weekend, everyone. Nice talking to you all.